Good morning. I'm going to call the January 29th, 2026 Audit Committee meeting for the Savannah Chatham County Public School System to order. We do have some folks that are being caught by the train, but we're going to go ahead and get started. So the agenda will float between 4.01 and 4.02 based on when Malden Jenkins gets here. So Malden Jenkins is here. So now I'll entertain a motion to approve the agenda. The agenda is approved. The first item on the agenda is the approval of the minutes from our last meeting. Are there any additions or comments or edits? Seeing none, I'll entertain a motion.
I'll move that we approve the minutes as presented.
It's been properly moved and seconded that we approve the minutes of our last meeting. All in favor? The minutes are approved. Backing up real quick, we want to introduce our newest board member. Ma'am, the floor is yours.
Good morning. I am Lydia Rayner-Syed, and I'm excited to be a part of the audit committee. I work with New York Life. I'm a financial professional, and I'm happy to be here.
Welcome. Thank you so much for your service. With that, Hope, are you ready, or you need another 30 seconds?
I think they're going to pass out some documents to
Okay.
you, and then I'll be glad to go ahead and start.
Morning, guys.
I'll give you the whole box. Horrible. Right here. What is this? No. Thank you.
They have it.
We're just killing trees. Slaughtering trees. Slaughtering trees. I got 3, yes, ma'am. I got 3. All right. All righty. Everybody's got their documents in front of them. I know these are in the packet, so the floor is yours.
Well, good morning. Thank you for the opportunity to come and speak with you today. My name is Hope Pendergrass. I'm a partner with Malden Jenkins. I do apologize for my tardiness. I came down last night. I stayed in a hotel a mile away, and it just didn't happen this morning between the hotel valet and the train. But I am excited to be here with you all today. The documents that they have passed out to you all have been included, I believe, in your packet that you received last week. But I did want to go ahead and bring hard copies today just for ease of viewing. The first document we'll go over is the thickest document. It's the one called your Annual Comprehensive Financial Report, or your ACFR. I did have another name before, but now it's the ACFR. And I just always want to start off by commending you all for your commitment to financial stewardship and transparency. Savannah Chatham is one of the few school districts in the state that goes above and beyond and prepares an annual comprehensive financial report. This is way beyond the basic requirement. So y'all are one of the few few school districts in the state that take the initiative to go above and beyond. And you do submit this to two entities, the Government Finance Officers Association and the Association of School Business Officials, for an award each year. And I believe y'all been doing that for some time now. And copies of the award that you receive are included in the introductory section of this report. So in addition to your basic financial statements and the related note disclosures, this also includes two additional sections. Because it's an ACFR, you have your introductory section, which includes a lot of information and profile of the district. It also includes the transmittal letter, which tells if it were a visitor to your community, it would tell that visitor, who is Savannah Chatham Schools? What is Savannah? What is in Savannah? What is our local economy like? So that's a real interesting letter that's included, and that is prepared by management. That's included in the front of the document. And then after the basic financial statements and supplementary information, there's another section in the back called the statistical section. And this information is 10 years of trend data on various different things within the school district and the community. It gives information about revenue capacity, debt capacity, operating statistics, your physical capacity as far as your school buildings. So there's a lot of information in this. And should you all have the need to go out and into any kind of financial market to obtain any kind of debt financing, this is what the Moody's people want to see. They want to see that you've done an ACFR and you have all that information in there for them. So the first thing I'm going to do is I'm going to open up to the page that would be numbered page 1. It is after the certificates and all the Roman numeral pages, but it has our logo at the top in the top left-hand corner because it is our independent auditor's report. And so you'll see there in the very second paragraph, it talks about our opinion. That is the goal of a financial statement audit. Our objective is to give an opinion on whether or not your financial statements are materially correct. And so that is the overall objective, and you all have met the objective and received what's called a clean or an unmodified opinion. That's the best that you can get. And again, congratulations to management, the board, and this committee for their support in that endeavor. That's what you want. The next thing that comes immediately after the opinion, starting on page 5, is what's called the management's discussion and analysis. And this is prepared by management, and it goes through and it discusses your financial performance for the audit year. It talks about the results of operations for the year, and it compares information to the prior year, and you can kind of see, okay, how are we doing based on last year? It also provides some information on your physical assets, any long-term debt that you have, information about your budget development, and then just some current economic conditions. So again, I would always encourage you that if you're going to read anything in this, read your management's discussion and analysis, because that does provide a good summary of the report and of the financial statements. I'll move on to page 23. Give you an opportunity to get to that page. So these are your fund financial statements. We present what we call major funds in singular columns. So your general fund is what called a major fund because it's a large fund. Your ESPOS fund, your ESSER fund, which finished out during the year, and then we have an aggregated column for your other funds. They are smaller in nature as compared to these two funds. And I'm going to call your attention to your total expenditures there. You had about $576 million. So if you expended equally over every week of the year, which of course you do not, but if you did, you would be spending approximately $11 million a week to fund your operation. And if you compare that to total fund balance ending for the general fund of $258.3 million, if you were to equate your expenditures to your fund balance, you would have about 23 weeks of operating reserves. So if you didn't take in another dollar, you would have been able to operate for another 23 weeks. That's pretty strong, and it is comparable to last year. I went back and looked, and y'all were in pretty much the same equity position based on your expenditures, but of course your expenditures went up this year. I usually tell people that, if you'll flip back to page 21, I usually tell people that fund balance does not necessarily equal cash because you have what's called accruals in there. You have some accounts receivable, you have some accounts payable, but you all are unique in that you are very liquid. If you look up there, you have total fund balance of $258 million, but your total cash is over $270 million. So at 6/30/25, which is 1 day in time, you all were in a very liquid position. Page 30 starts the notes to financial statements. This gives a lot more detailed information about the financial numbers that are presented in the basic financial statements. It gives more information about your accounting policies. It gives a summary of your capital asset activity, your long-term debt activity, and there are several pages about your participation in the state benefit plans, TRS, ERS, PSERS, and the state health benefit plan as you provide that to your retirees. So there's a lot of information in there about that. The next page that I'll call your attention to is page 79. Again, I'll give you a moment to get there. This is your general fund budget to actual numbers. So this shows, this is how you plan to spend the money, and this is how it actually was spent and how you actually did. You budgeted amended budgets in the second column. So you budgeted to take in about $620 million, but you exceeded that budget by $650. Main variance there is property taxes, state sources, and then some other revenues. And then your expenditures, you also budgeted to spend about $592 million, but you came in under budget, so you only spent about $576 million. And then going down the bottom of the page, after some transfers out to other funds to subsidize those operations, you had originally budgeted to use about $8.2 million in fund balance. You amended that to use $20 million in fund balance, but you ended up adding to fund balance of about $22.8 million. So that's how you got down to that. So this just kind of gives you a snapshot of how you did based on how you estimated that you might do for the year and the results of that operations.
Just ask a question on this page?
Sure.
So in simple terms, we collected $31 million more than we expected,
Yes, sir.
and we spent $16 million less.
Yes, sir.
So we're holding $47 million of the taxpayers' money.
Well, then you had transfers. So those
Okay.
go to other funds that do not have significant resources to fund their operations. You're required to have, present funds in separate buckets, and they don't always have enough revenue to support their operations, so that ends up coming from the general fund.
So this
after those
42
transfers,
is the 42 the net number?
no, sir, you go
Okay.
down to the 22 million. That's how much you added to your fund balance.
Okay, so what is the fund balance this year?
It's on that very last line in the third column, 258.3 million.
Okay. Go ahead.
Thank you. So can you talk about interest? So that number includes interest revenue? So is it 22 collected, or is 22 collected, and to get to the 42, it's also the interest that we've earned on that?
So
That-
your interest
maybe
is
that's
earned
not
on the
right.
cash that you hold during the year. So you all took in $31 million more than you anticipated and spent $16 million less than you anticipated. But then you also had transfers. You transferred out $4.6 million more. So that's how we get down to, okay, our revenues and our inflows exceeded our outflows by 22 million. So that's how much you added to your total savings account for the year.
Right, I understand. I just wanted to know how much was collected versus how much we generated by having.
Your interest number, I don't think
Yeah.
we have that split out separately, but Rosalind, could you get that information for them?
Okay, thank you.
Anything else on that section? Not all, and I'm an accounting nerd. I've kind of explained that to you all before. But the next thing I like to talk about is, as we talk about budget, I always like to remind boards about the fact that you all participate in these state benefit plans, the TRS plan, the ERS plan, PSERS, and the state health benefit plan. And guess what? You all have no input on how much those things cost you. You know, the plan sets the benefit structure, the plan sets the contribution rate, and as a participating employer, y'all have to contribute for your employees. And so, and they manage the plan, they manage the investments. So I always like to highlight the fact that when you all are doing a budget and you're developing it, you have to think about, you know, someone else has a large portion of the control over some of our cost. So when you are budgeting and when you're thinking about, you know, how much fund balance do we have and all that, one of the things you have to think about is, okay, we're going to have these benefits and those costs are controlled by someone else. You know, your state salary scale, that's also controlled by someone else. And so when the legislature approves, you know, an increase to teacher salaries, well, yeah, that's just for state-funded positions. So does that mean your local funded teachers are not going to get that as well? That's a decision that boards like you all have to make. So I just want to make sure that is something that you all think about when you're developing budget and you're evaluating the results of your budget to actual. It's about how some of those costs are beyond the local control. But on pages 83 and 84, this is an example of your TRS contribution. So this is another schedule that gives you a 10-year history. If you look on the far right page, page 84, you all contributed in 2016. You all contributed about 29.5%. That's the employer cost for TRS for your employees. In 2025, that contribution was $66.2 million. So in 10 years, you all have more than doubled the amount that you all are being requested to pay for TRS. The
How does
bottom
that
line.
compare to staff growth?
I'm sorry?
How does that compare to staff growth?
How does that compare to staff?
Well, we had a lot more employees in 2025 than we did in 2016.
Yes, that would be correct, but that bottom line on that page also shows you that the contribution rate went from 14% of their pay to over 20% of their pay. And I think for 2026, is it over 21% now? 21, yeah. I'm sorry, Dr. Watts?
It's anticipated to go up again this year.
In 2027 coming up. So I just say that to make sure that, you know, that we're thinking about, hey, there's still a lot of costs because 85 to 90% of anybody's budget is salary and benefits. So that is a strong part of your budget to actual. Let's see. The stat tables, the statistical tables that I referenced earlier, they start on page 113. So again, it doesn't look like, okay, I see now. Again, this gives you 10-year history of your financial operations, your debt capacity operations, your operating statistics. There's a lot of demographic statistics about your community, 10-year history, per capita income. Again, I'm an accounting nerd, but there's a lot of stuff to geek out about on this stuff, but it really just is kind of give you perspective about where you all in the community were 10 years ago versus where you are now. There's property taxpayer information, who your top 10 taxpayers were 10 years ago and what they are now. So again, that's just a lot of cool information to go back and see. That's all that I had on the ACFR. If there are any more questions. If not, I'll move on to the single audit report.
Well, I think there will be some questions.
Sure, at the end or now.
Thank you. Yeah, they're brief, just
No problem.
comments,
You always bring the
compliments, and
best
questions.
ones, so.
Thank you. On the management response, I just want to give a compliment to Dr. Watts on the development of that. That always has really good information. I thought it did an exceptional job. I was excited about some of the statistics I saw around, the demographics of our community and where our revenue is coming from, manufacturing, that sort of thing, and even getting some up-to-date numbers on the contribution of the film industry. So thank you. I appreciated that. I had two questions. One about the pension, that there was a decrease in pension liability. Am I in the right section?
What page are you on?
Crap, I'm not on a page
Okay.
because I noted all my pages and then I lost my file. So I'm not on the page. I just wrote down my questions. There was a comment, and I'm okay getting this at another time. There was a note that said that there was a decrease in pension liability for the district, and I just wondered under what conditions that would happen, because that sounds sad.
Well, anytime your liabilities go down, that's actually a good thing.
Well,
'cause that means
it's
you
good
owe
for
less.
money, but I'm thinking, are people dying? Like, what's happening
So,
for that?
The way the pension liability is developed is, so there's benefit structure. This is how much we're gonna pay you on your retirement based on your, average salary over a certain period of time and your, years of service, right? So an actuary, who is not an accountant, therefore I do not know everything that they think about when they develop this, but an actuary is someone who says, okay, based on the average person and how long they live and how long they're going to serve and what they're going to make, we're going to say, and how many people we have in the plan, we're going to develop this estimate of what we think the liability in the plan is. This is how much money it's going to take to give everybody that's in the plan all the benefits that he or she earns based on the structure of the plan. That's how, and then they take that and say, okay, well, this is how much money we think we need times the growth that we expect in the market to make sure everybody has that benefit. It's there for them when they retire. And so that's how they use that information to set the contribution rates that they ask you all to contribute. If you actually go back to pages, I think it was 81 and 82.
Yeah, it is 81, thank you.
Okay, so the very last row on those two pages shows you the percentage funded of the plan. And what that means is the value of the assets as compared to the actuarially determined liability. An actuary is providing an estimate of this is how much money this plan will need. So as of 6/30/25, the plan was not quite 81% funded, which means there were enough assets there to give 81%, to be 81% of what we think the plan is going to need to pay everybody. That doesn't mean that the plan doesn't have money.
Okay.
It just means that if everybody lives as long as we think they're going to live, and everybody works 30 years plus, and everybody makes a certain amount for those last 2 or 3 years, I can't remember what it is now, then they're going to need this much money. And so the difference in the value of the plan assets and the liability is what we call the net pension liability. So the fact that it goes down means the funding percentage of the plan went up. So
Got
there's
it.
more money available to fund the plan. So that's why I say it's actually a good thing.
Good, okay, so I'm to be happy.
Yes.
Because the market is such that that folks are receiving their pension in the way that they should with our net contribution being less.
Well, they don't reduce your
What
contribution.
I mean, the net liability, I think I got it.
Yeah.
Thank you.
But one thing too to remember is, and when I was talking about, you all don't have, I mean, other than to lobby your legislature, you don't have input on this, on the plan contributions this is not a liability. We have to record it on your books in accordance with GASB standards, but it's not like they're gonna come to you and say, hey, Savannah Chatham, we need $466 million to pay the pension plan. The only thing you all are responsible for are your contributions, which you all are making with no problem. So, but GAP's requirements require us to record it because you all are a participating employer, because that liability exists, you all have to record your share of it. And the very top line shows your percentage. So of the total employers in the plan, you all represent about 1.8% of the total liability. So if you did the inverse math there, you'd see how much that liability really is.
Okay. Thank you.
Yes,
And then-
ma'am.
And then the only other question I have, I think, is more for management, and it's just a weird question that it stuck out to me. We have works of art, so we have $52,000. What works of, can someone let me know at another time? Like, what do we have that qualifies as works of art? I didn't realize that we had that, but that's listed in our assets.
I think I asked that question last year. It is a mystery.
Okay, thank you.
There might be a portrait of Roger somewhere.
Okay, so now we need to talk about what qualifies as art. Thank you.
Yes, ma'am. Okay.
Are there any other questions?
So if
Mr.
school
Caldwell, nice to see you.
Good to see you as well. So if school systems don't use the TRS and ERS retirement plans, do they go to the public market and use other retirement plans? Like, is that an option, or do we have to use the TRS plans?
I believe, do y'all offer a 403B for some employees as well?
Well, just from Raven Human Resources, it was required by the state of Georgia. We have no option to get out of TRS, and there's actually there's actually PSERS for our public school retirement, and then there's some employees that we have in the ESERS, I think. But we do have 403B, 457B optional retirement plans that employees can contribute to, but that's voluntary. But as far as what's required, supplemental. But what's required is what we have with TRS, PSERS.
Okay, that's what I was thinking. I just didn't know if there was another option out there where we have more say on our contribution limits and stuff like that other school systems may be doing.
No, I mean, I have had some school districts with the explosion of state health costs, because, I mean, when I first started, you were paying, employer paid $162.72 a month per employee, and now it's up to like $2,000 a month y'all pay per employee for health insurance. And so I have had some school districts explore whether or not they could get out of state health and go into the market and find a cheaper health insurance plan, and it was severely not advantageous to them to do that, even with the large cost of it. So I do have some school districts that have explored the option to provide an alternative way to provide insurance for their classified positions, but it involves outsourcing those positions. They would not remain as employees of the school district. They would contract out those services like janitorial, transportation, school nutrition, et cetera. It's just the way that some school districts are considering how to cut costs.
And one point, I mean, there are charter districts with more flexibility. We're not a charter district, we're a Swiss district. I don't know all the implications of what a charter district's freedoms may be in that area of benefits, but we are not a charter district, so we don't have as many freedoms as a charter district could have. But I haven't explored everything and to that extent that would have flexibility on the benefits side, so.
Yeah, I don't have anybody that's gotten out of state health or TRS or ERS or any of that.
Okay,
So,
thank you.
One question I had, and just looking at the total expenditures, if we take a just really big zoom out and look at the total number of expenditures and divide that between the number of students in the district to get a number spent per student in the district, I try to do the math on that myself. I'm not an accountant, so I might be wrong, but I'm just curious if you can speak as to how this district compares to other districts in the state. And I know it's maybe not a fair comparison since money comes from all different places for different purposes, but if we just really zoom out and look at total expenditures and then number of students.
I was trying to see if that was one of your statistical tables. Thank you, Mr. Caldwell, yeah. So if you look on page 135, it does show your enrollment, your total governmental activities expense. So that is all your expense. That's not just general fund expense. That includes, all your title programs, your school nutrition, the change in your actuarially determined liability, all your expense. And so then it has a cost per student. And you'll see that that has increased. But you also have to think about cost of living, and everything is different in every community as well. I don't have statistics on how you all compare to other districts, but I can certainly give management some information on links to other ACFRs that do have this information for y'all's comparison purpose.
Thank you.
Thank you. I think that's a good question, and I think our team could generate it, but I would be interested in knowing that value with the cost of living increases, either pulled out, because each year we get the cost of living increase, we get the raises from the governor. He says they're going to be raises. Those are for teachers. The district adds in everyone so that we're not doing it just for the ones that are funded from the state. So the cost per year is going to automatically be up for all of those raises anyway. And also, this has within it a couple of years of the ESSER funding
Yes, ma'am.
and years that we don't have ESSER funding, which is the money we got in the pandemic. But I think that we could get the answer to that question, pull out ESSER, pull out raises, and see if we really have gone up per student. And I would be interested in knowing that.
I think it might be also good to flip back to page 132 and look at personal per capita income. So that's your total population in your community divided by, and so that's provided by the Bureau of Economic Statistics. So the most recent 2 years are not available yet, but you can kind of see just in the years that are presented that there's been an increase in income. So that just shows you overall costs have gone up, not just you all's particular costs and expenditures.
So one question, on page 135, we show a total government activity expense of 739. And then, but our total expenditures on page 23 is 884, 186. So where did that 150 million go?
So, there is a reason, I'm trying to explain it. So, your fund level statements, which is what pages 21 and 23 are prepared on what's called the current resources measurement focus, which means there's no cost of your physical assets in there, there's no cost of your buildings or depreciation.
How
none
much
of
did
that.
we spend last year? Did we spend 884 million, or did we spend 739 million?
800 and, I didn't see that number. Let me go
Total
back.
expenditures on page 23.
She said current recent assets.
So total expenditures on page 23, again, it doesn't include some of your long-term stuff, whereas this number on page 135 does include all that. And that agrees to page 20 in the front statements, which is your full accrual statements. And so your total expenditures for the year on a full accrual, which recognizes depreciation, which is not a cash type item. So your total expenditures would be the 739. It's just your general fund, which doesn't include those long-term items, is gonna have a lower number, because it doesn't have depreciation, it doesn't have the pension costs, it doesn't have all that in it.
But this number's bigger.
Yeah, the number at the government-wide, the 739 will be bigger, because it
No,
includes your
it's not
pension
bigger than
expense, it
884.
includes depreciation, it includes all that.
This number on page 23 is bigger than the number on page 135.
Well, the pension liability went down, and so we had to recognize the change in the pension liability against expense.
Okay, so this is a very simple question. We spent 740 million, or we spent 885 million? I mean, it says total expenditures for the year ended 30 June 2025.
Well, it's two different bases of accounting. I'm trying to
Okay,
explain
so
it based on
Explain it to me like a taxpayer. What went out the door?
what went out the door, then that's gonna be the 884.
Okay, thank you. Are there any other questions? Yes, ma'am.
Thank you. I just want to ask about the funding sources. Does this report combine both federal and state funding sources for our employees? Because some employers they receive their sources through federal,
Yes, ma'am, it includes
so
both.
it includes both. Okay.
Local, state, federal.
Ms. Campbell?
I like these reports for 10 years because it helps me kind of format my understanding for budget season more than anything, more than having the conversation, I guess, during this meeting per se. But to your question, Mr. Everett, the cost per student doubled in a decade, and just commensurate with that is that enrollment has declined, but staffing in the classroom seems to have remained flat. So it's something that I do want us to look at again and take really seriously come budget season. Why is it that we've doubled our overall cost per student in 10 years? While teachers, obviously, I think the percentage increase in teachers was 2%, which is fine, and it kind of tracks with enrollment decline. But the overall cost has outpaced inflation significantly of what it costs to educate students, especially with the results that we're trying to work on now to get better outcomes for students. So I wanted to speak to that based on what you had said.
Woods?
Yes, ma'am.
She was telling us the basis of the calculation on 23, and you said it was current. Could you repeat that?
Current resources measurement focus.
Current resources measurement focus. Thank you.
Are there any other questions? All right, thank you.
Okay. The next document that I'll talk about is your single audit report. So in addition to your state and local revenues that you all receive, you also receive a significant amount of federal funding. You all received approximately $70.4 million in federal expenditures, and that's detailed out by program on page 8 in this document. Pages 7 and 8, but the total's on page 8. So that shows you the various different programs that you have. As part of our service to you all, we have to perform what's called a single audit or a federal compliance audit. We don't look at every program. We do a risk-based assessment, and we look at different programs each year. But this year, we looked at your school nutrition cluster program, as well as your Title II program, which normally focuses more on professional development. That represented about 20 million of the 70 million, or 28%. And in addition to our financial statement opinion, we have to give an opinion on whether or not you materially complied in regard with federal requirements. And we did find that you all materially complied with that, so you got another clean opinion. The other opinion at the front of this document is our opinion on our evaluation of internal controls. We don't audit or formally test internal controls, but we do report anything that we determine is what's called a significant deficiency or material weakness, and we had none. So you all had no findings this year. So again, I want to commend management and the board for that. It's not everywhere that we go that we have no findings to report. So great job.
Ms. Howard Hall has a question.
Yes, why isn't Title I included on this page? I see all of the other title programs. I don't see
It
Title.
should be. It's on page 7, 18.2 million. It's about 2/3 of the way down the
Okay, when you
page.
said page 8, I didn't realize you
That was
had-
where the total was. Yes,
Okay.
ma'am. Page 7 starts the schedule. Title I's about 2/3 of the way down the page, 18.2 million.
Okay, thank you.
Yes, ma'am.
Are there any other questions? So when you say complied with the federal requirements, did you look at payment processing?
I mean, we evaluate cash management, but we don't like specifically look at processes. And an audit objective is to determine material compliance, not necessarily look at processes, so.
Would federally required insurance be part of a requirement to determine
That's not one of the
compliance?
requirements we look at. The federal government picks like certain requirements that they want auditors to test, which are certainly not all, because we would be here forever looking at every single thing. But the ones that they give us to look at don't normally include insurance.
Okay, so your statement of compliance doesn't look at whether or not we complied with payment processes?
No.
Okay, thank you. Are there any other questions?
The last document is our auditor's discussion and analysis. This is not required by the standards, but it is our way of kind of summing everything up. This document includes the required communications that we are required to report to you all. It also provides a quick summary of some of the financial information. It provides a few recommendations that we had, none of which give me pause or heartburn. And then there's another information in the back about upcoming GASB pronouncements. The GASB, or the Governmental Accounting Standard Board, sets the accounting rules per se for governments. And so we like to make sure that you all are aware of upcoming changes in the accounting standards and pronouncements. And then the very back, we talk about some of our additional services that we provide. So that's just kind of a summarization of our services and the results of your operations. But it doesn't provide anything new other than the recommendations that we have. And then I think you have the management letter, which those recommendations are also in the AD&A as well. That's all I had to present. I'll be happy to answer any other questions that you all may have, though.
Ms. Campbell? And Ms. Hoskins Brown after.
Okay, so I am back, let's see, I have it electronically, I'm sorry, so it's gonna be
Yeah, no
hard to
problem.
follow
Just tell me what
necessarily.
page.
Well, maybe just non-specifically here.
Okay.
When we see, like, relevant financial policies, it is page 7 in Roman numerals, it looks like on something. And you discuss how our fund balance should not exceed 5 months of budgeted expenditures, and I'm not sure it does based on your calculations from earlier, if it was 11 million per week, and you said we had 23 weeks worth. But with some of the sightings that you give year after year that are identical, and seeing as we use the same company, which is great as far as picking up on deficiencies year over year that we can revisit and discuss with management and say, you know, we keep telling you to improve your internal controls. You're still giving us information late in the game or whatnot. I understand why it's a clean audit because your scope is a little different, but at what point do the AD&A, if they look the same every year, at what point do we then get dinged and say, you guys need to do better, we're not going to give you an award this year because it's the exact same AD&A for the last 5 to 7 years? Does that make sense?
Yes, ma'am. So, number one, the awards that you all receive are not given by us. They're given by 2 trade organizations, national trade organizations.
But you recommend them, isn't that correct?
I don't recommend for the award. We look at the award requirements and we advise you on how to make sure you meet the requirements for the reward, but we don't give the award. The recommendations that we have are not what we consider material enough to elevate to a level of a finding. The one in there about fund balance is a matter of state law. So as long as you continue to not meet it, which several districts don't meet it, because really 15% fund balance is not very much at all. You would be very, very lean. And so, but we're required because it's a state law to continue to report it. So that's why that one continues. The other ones are just, I remember the goal of an audit is to provide an opinion on whether or not your statements are materially correct. But if we see anything that we think would be a good recommendation for how you can improve your process, then we would report that. So that's where our management letter comments come in that we include in our AD&A. So unless something, I do have districts that we go in and we have to adjust every balance. And so and you all have never been in that situation, but we do write findings for, maintenance of financial records if they are at such a point that they've deteriorated that they're almost unauditable. But you all have never been in that situation. So I wouldn't expect that you would. So therefore, I would not expect that our recommendations, while they might be some of the similar ones, would ever elevate to a level that we would need to report it at a higher level.
Okay. And one thing that I want us to think about as a board and for Finance Committee is this gap, standard of 2 to 3 months of operating funds when we start discussing this for budget season. I would love it if we could codify this some way. What is the number that and knowing that it will adjust every year, but being able to put that number specifically somewhere and say, this is how much fund balance we're going to have so that we know how we can appease the burden on taxpayers by using some of that fund balance instead of increasing the millage rate or keeping it the same or lowering it a little but still collecting more, if that makes sense.
Dr. Hoskins-Brown?
I lost my question. I started thinking about something else. Because I also am interested in how we look at our budget process. This is not directed to our presenter. This is in support of Mrs. Campbell's comment. I would love for us to start with the dollar amount in our budget process and work backwards rather than start with the programs for, yes. And if we're interested in keeping revenue flat, then we can start with that dollar and then move backwards. And then we won't have to worry about the idea of fund balance. But I lost my other question because I thought what you were talking about was intriguing, so thanks.
Yes, ma'am.
I agree with Dr. Hoskins-Brown. One thing I would maybe change a little bit is instead of figuring out what our revenue is going to be and then working backwards would be figuring out the bottom dollar number it takes to educate a student and then figuring out from there how much we're going to need and then setting the millage rate. Because when we do them simultaneously, it concerns me a little bit because the emphasis isn't put on the actual cost that it may take. And I know that we are doing amazing things in the ROI, framework of was this successful, was this not? Should we cut this program? Should we make this program larger, like Ignite? But then we know what we're going to need for the year in this realm. Therefore, this is how much revenue we would need to make that happen, if that makes sense, yeah?
Both
Both approaches make sense to me, and then last year, another approach emerged that we should take. So I just need guidance on which approach we would like to have. I know I spent Monday with the finance team working on getting a clear understanding of our revenue, particularly why we often we project one number, but actually get more. And I was able to get a little bit more understanding of that. So to your point, Dr. Hoskins Brown, about knowing what the revenue generation is, I started working on that on Monday. I probably would need to think a little bit more about your request around how much does it cost to educate a student? That's a loaded question depending on the student and the services that they need and require and all the different funding sources that go into creating that number. That's not going to be the same for every child. So that's a different approach. And then last year, we sort of worked from the approach of tell us what the ideal state is, and then we'll decide whether we need to increase or decrease millage. So there are lots of different ways we can approach it.
Yeah, I agree, and I did remember my question. But on that, like just in my household, I have children who are serviced by special education, and whose the cost of educating each of our children is different. And that's why the cost per pupil is challenging, because some children don't require the level of services, and so they're going to be much less expensive.
Yes.
But if you have a child that is utilizing several services, in addition to Ignite, in addition to whatever other.
And they're in a choice program.
And they're in a choice
And they
program.
participate in the band, and like all of those numbers factor in.
Yeah, so that's why I appreciate the conversation around cost per pupil as a shorthand to understand tax burden. But when you're actually looking, just like in my household, for how public education has served everyone under my roof, it is vastly different from our eldest son to our daughter.
Yes.
So thank you for that discussion, though, and I look forward to talking about it in finance. My question was about observations related to the budget process, and whether or not, and I understand your scope isn't necessarily looking at those things, but I was just curious whether or not what your review showed, whether there's any comment or opinion or thoughts about our budget process relative to your observations and how you observe other districts that would be beneficial for us to hear.
So evaluating a process is not necessarily within our scope, but all these things that y'all have been talking about with budgeting are things that I think a lot of boards across the state are looking at. And, a lot of districts are working on what they're calling the COVID funding cliff, because you got a significant amount of federal dollars, and a lot of people use those to provide additional resources for those at-risk students. And it's been helpful, but now the funding's not there anymore. So how do you sustain the gains that you made during that period of time? So I feel like you all are going through some of the same challenges that other school districts, especially districts of your size, are going through.
Thank you.
Are there any other questions? I just have three, and going back to the total expenditure. On page 16, in the management discussion, there's 884, and then there's another 52 million of other financing uses. So did that 52 million go out the door in FY 2025 as well?
Those are transfers, I believe, if you go back to page 23. Other financing uses,
On page 16.
yes, sir, I see it on page 16, and that number agrees to the number on page 23. There's a section for other financing sources and uses on page 23, on the far right column. It'll show you that transfers out 52,330. That is essentially a movement of money.
That just moving in and out.
It's just moving in and out. So
Okay.
you'll see there's an offset above it of a almost similar number.
Okay, thank you. And then my other two questions for the awards, just so people understand, what is the criteria for the two awards?
Well, there's a long checklist, but essentially you're making sure that the financial statements are presented in accordance with GAAP and applicable GASB standards. So they go through and they say, do you have this? Have you handled it this way in accordance with the accounting standards?
Okay, and the other one?
They're the same for both. They're just two organizations.
Okay. All right, thank you. Are there any other questions? Seeing none, we'll entertain a motion to recommend the audit to the board. It's been properly moved and seconded that we accept the annual comprehensive financial report for 2025. All in favor? The report is adopted. Thank you.
Thank you.
Well, we have 6 minutes. You tell me, Leah.
So Shauna is not going to bring up the presentation, if that's okay for time purposes, so she can just start speaking, if that's all right
That would
with
be
you all.
perfect.
Hello, good morning.
You don't really just have 6 minutes. You have as long as you need.
Okay. Good morning. I'll be presenting the business process review for 2025-26. Just an overview of when we conduct business process reviews for each schools. We do it when there's a new principal every 4 years from the last review. Follow-up. So if the follow-up from the previous reports of high error rate, we use a 20% error rate. So anything over 20%, we follow up the following year just on those areas that's over 20%. And then we also do it at the request of the principals, and we also can use that like as a non-audit service. We look at compliance and not performance. For compliance, we're just identifying if everything is adherent to the law, to the rules and procedures. I'll just skip to the findings for this year. We looked at 31 schools. The sections we looked at was accounts payable, student activity funds, purchase cards, student data, nurse, and student school nutrition. And I just have an average of the percentage of errors in every section. For the accounts payable within the 31 schools, it was a 14.29%. Student activity funds, it was 8.78%. Purchase cards was 22.2%. Student data was 23.2%. Nurse was 8.59%. And school nutrition was 9.9%. Any questions?
Are there any questions? I just had one. On Southwest Elementary, there was a 54% error rate in student data. That just jumped out at me. And you can write me back later, but that's just 1 out of 2. That seemed really bad.
So with the student data piece, let me go. So with the student data piece, what we look at is we just strictly look at the discipline referral form to see if it's in compliance. Well, first, does it match what was entered into the system? Does the attendance piece, so what component of that 54% is a makeup of the multiple controls that we look at, which includes, does the form match the Power School report? Does the attendance that is listed on the form match the actual attendance that was listed within Power School for that time period? Do we look to see if the incident description that is provided by the teacher match the consequence and incident code that supports the code of conduct? And then we also look to make sure that it was entered within 48 hours and that the severity code, which is also a component of the student code of conduct, was reported correctly as well. So that is the makeup, depending on the level and the different, because we don't have all the reports in front of us to pull that up. That is the makeup of that 54%. I don't know specifically what those errors were, but that should be defined in the bullet points of the Southwest school.
Thank you. Yes, ma'am.
Thank you. When you get 391 page, well, great presentation, thank you. Good job of being succinct when you've been moved to the end of the meeting, so thank you for that. Just leadership, when you get a 391-page document 5 days before a meeting, you're communicating to the committee, I don't think you read this. And we do aim to read it. overall, one of my concerns is that the schools that have poor performance in student data, that's really problematic for board members, because when students come up to us for decisions, a lot of times we're looking at the student data and we're thinking it's right, the discipline data, the attendance data. And so if student data is wrong, the consequence for a student may be, it may be alternative placement or not. It really is important. And so that's just something to convey to staff as they go back and clean up those data when you detect and notify them of those errors. The other question, I had this question about purchases and procurement. When you have a high error rate for P cards, for example, 41% of the P cards that were sampled, there were challenges with how it was done. How are you able to look at the difference between a school that does a whole bunch of P card purchases that Leah's like, I know where she's going. So how are you able to tell the difference between a school that has a high error rate, but they only use the P card 5 times a year, and 4 times that year they screwed it up, versus a school that does 100 P card transactions and they make many mistakes, but because they do so many transactions, the percentage is lower and it looks like everything is fine? Are you able to see that through your audit process?
So we see it indirectly, right? Because we're experiencing this as we go from school to school. And I love that you lifted this question up, because I wanted to figure out how to bring, and we are looking at revamping this process because it is outdated. It is a nice service that we do provide principals if they want that snapshot from that front office staff to know how they're doing. But when you bring it globally and provide that summary report, these are the questions that come up for us, right? So how can we actually help management identify these problems to see if it's just a systematic issue or if it is a individual school issue, right? Because exactly, we'll see one that only has like 5 purchase card transactions, and if there's 2 errors there, it's gonna be just as high as one, that has 100 transactions and there's 50 errors, right? Okay. So what we wanna do is we will be working with the Office of School Leadership, because as you know, they're working on that discipline process moving forward as well, to try to revamp how we can provide this service to them in order to support principals as well, but also for us as internal auditors to try to refocus on how we look at this from a control standpoint and provide that to you continuously to make sure we are looking, is this a systematic control issue or is it an individual school issue? So we will be bringing something to you when we bring the audit plan of any adjustments that we make to this.
Great. Thank you for your answer. And again, nice job.
Ms. Campbell?
Along similar lines as Dr. Hoskins Brown, I know that some of the principals opted with the P cards to just forego getting them again. So it sounds to me like it might be more of like a structural sort of issue with the use of P cards and what the rules are versus like random pockets of noncompliance. Like maybe there's some confusion, and it looks like the way that we address it is mostly training. So if the training isn't working because we're seeing repeat issues in the schools that had, repeat percentages that were either roughly the same or higher, then maybe we need to think about some other, tactics to or maybe get rid of the P cards altogether, or maybe restructure it. I don't know. But the one that I really focused on was student data, because that has been, behavior and discipline have been something that we have talked about ad nauseum on the board. And now it makes me wonder if it's not just a behavioral issue, but an informational issue, as Dr. Hoskins Brown mentioned, is the data that we're reviewing from the board member standpoint, and all the way up to administration. If, like Dr. Watts is looking at data, but it's not accurate data, what's the issue? Is it worse than we think? Is it better than we think? Who knows, right? Because the information is inaccurate. But I think what we really, really care about is that there is something in place that makes it simpler for consequence to happen in a classroom. If someone's being disruptive, for that disruption to be able to be removed, from the class so that the teacher can keep teaching. And I mentioned this at a prior meeting, but I had a response form in my hand from a school, and it was 5 responses required, written down, for every time there was an infraction from a specific, from this certain child with their name at the top of the paper in a middle school. And they had to have 5 before, or 4 before it got escalated to administration, and then they could get an administrative consequence. This, to me, is like almost, I don't know if draconian's a word. I mean, it feels like we're doing too much. We're requiring too much of teachers who are already trying to manage behavior in the classrooms. And that might be part of this, right? If they're not reporting in 48 hours and notes aren't matching internal, software and what the written note says here, there's just too many pieces that we're trying to account for when really we're just trying to help teachers teach and students learn. So maybe we need to simplify some of these things, and I'll just offer that.
Thank you, absolutely. I would just say, as a victim, customer of Power School as a family, it is rare that the truth in Power School is the truth our child tells us, and then we can call the teacher and get the ground truth. But yeah, and I learned this from you a year ago about the disciplinary record being kind of the child's biography. I think that was your phrase. And so I think P cards are very important, and we need to maintain our financial discipline, but I think that is really something we need to look at as a team on that one. Yes, ma'am.
I really appreciate Ms. Campbell sharing her experience with that document, because for me, it's really alarming that someone has created a sub-discipline process, because we have a discipline manual. It's a book that we publish every year. It goes to all parents. I just had a parent call me a couple of days ago because they were upset with how discipline was being applied. And I went through the discipline manual, and I said, here's these type, level 1, 2, and 3 infractions. And what you just said is a whole nother process that's not board approved. Somebody has created a discipline policy, and that's not acceptable, because then that means whoever's created that process, they've created inequity with other kids who are not being treated the same way for the same behavior. So I'm glad you brought it up. I believe that leadership heard it. I certainly heard it, and I think that's problematic, because you're right. One, that creates extra work for that teacher, and also it's unfair to all the other kids and all the other teachers who are using the policy that we've published. And that's not audit, but thank you for bringing that up.
Are there any other comments? If not, I'll entertain a motion to accept the report as submitted. It's been properly moved and seconded that we accept the audit of business practices and forward to the board. All in favor? The report is accepted. Is there any other business? Seeing none, I'll entertain a motion to adjourn.
Second.
We are adjourned. Thank you, everyone.